Hello, how's everyone doing? Welcome back to another video of Josh's Chart Lab YouTube channel. Okay, so if you're new to the channel, I speak everything forex, mindset, fitness, everything. So if that is your cup of tea and it interests you in any sort of form, please do subscribe so you can get notified when I do post more videos. So it's been a while since I posted a video, around 3 to 4 months, but I'm back. And happy new year. We're about to have a big year this year, and let's go. So let me get right into it. So in front of me I got Emini S&P 500 futures contract March 2023. You can see here on the top left. Okay, so this is a screenshot I took on the 5th of January 2023. Today's date is the 8th of January 2023. It's Sunday. Okay, so I took the screenshot of E-mini S&P. So let me just explain what's going on here. So we had Tuesday's trading. That's when the market opened on the 3rd of January. Price rallied, created a high of the day between 2 and 5 for London. Okay, after taking out buy side liquidity. Smart money reversal, market maker sell model. Okay, in a market maker sell model, we know three things that always happen: the original consolidation, the smart money reversal, and then the clearing of the original consolidation, which we then saw. So this is the buy side of the curve, smart money reversal, sell side of the curve. 9 a.m. to 10:30, we saw the OTE. Between these highs, if you look on your own charts, there was SMT divergence between S&P and NASDAQ. Okay, showing that S&P was weaker on Tuesday, and then we saw the sell off lower, taking out previous day's low, completing the market maker sell model, which is what I've indicated there. Okay, then we had price pull back and then consolidate into Wednesday. So Wednesday's trading, we had price, the daily open price indicated here. Price open, went down, created the low of the day, went up, created the high of the day between 10 and 12. London close. The low of the day came between 9 and 10:30 a.m. So sideways movement to then going into Thursday. Okay, so if you look closely at Wednesday's trading, it was an inside bar, which means Wednesday did not take out Tuesday's high or Tuesday's low. Okay, can you see that? Wednesday's trading was inside Tuesday's range. When we see this in price action, what is this telling us? This is telling us that we are about to have a big range day, either the following day on Thursday or Friday. Okay, so within the next 2 trading days, there's going to be a big range day, and that is confirmed by the inside bar, which is the daily range trading inside the previous day's range. So after we've had the inside bar, that's how I've indicated here, inside bar, I knew that we were going to have a big range day either Thursday or Friday. Okay, so but what was Friday? Friday was NFP day, high impact news driver for USD or the dollar. So with that being said, we could anticipate that the big range day would be on the Friday and not on the Thursday based on the economic calendar. Okay, but now with that big range, where would price draw to? Where would price go to next? So if you look closely here, I posted this chart in my Telegram channel, on the free Telegram channel on Thursday. I posted the screenshot and then I drew your attention up to here. Daily volume imbalance. I put this little R mark here, and then I drew it out. So if you go on your daily chart, you'll see that this is a daily volume imbalance, right? So this is where my draw on liquidity was, and this is where I was looking for price to draw up into. That's my draw. So my focus is up here. So anything that happens between Thursday and Friday, I know we're going to draw up here. And I have confidence that we'll draw up here because this would be the big range move that's happening after the inside bar on Wednesday. Okay, we also know 70% of the time Tuesday can create low or high of the week, which we now have the low of the week. We then also created a swing low. So this is a bottoming formation, giving us more confirmation that price is likely to draw up into here before taking out this low. So from here, we are more likely to trade higher than we are to trade lower. That's the bias. Does it mean we have a setup? No. That just means this is the idea we have going into the market based on the information we have present. Okay, so let's see what happened after the fact. So this is the same Emini S&P 500 chart, okay, but with a little bit more lipstick. And that screenshot we saw before, this was on Thursday, London. I took that screenshot between 2 and 5. This was the daily volume imbalance, and this is the little eyeball emoji. So this is where the draw was. This is where I was focusing price to draw up into on Thursday after the inside bar, which shows us that we're going to have a big range day either Thursday or the next day, Friday. But why would we anticipate to be on Friday instead of Thursday? Because Friday is the day with the big news or the news driver, which would make more logical sense for Friday to be the day that has the big range move. Okay, so we saw that Tuesday created the low of the week. In creating the low of the week, it took our sell side liquidity, then traded higher. Created the inside bar. Thursday, price traded lower. Friday, price traded lower again. But notice how on Friday, price did not take out Tuesday's low. Okay, whereas NASDAQ price took out Tuesday's low. Okay, as indicated here, that's the Kraken correlation, S&T divergence. Okay, another confluence for this high or this low not taking out this low is because this is a high resistance liquidity run signature, as the job has already been done, as this low or the price took out this low here. So now this becomes high resistance because the job has been done. Whereas this, for example, is low resistance because this high is lower than this high. If this high was higher than this high, it would also then be high resistance. But because of that fact, this is a low resistance, this is high resistance. So when price came down, this was the Judas swing from the open price. We then had the news driver, price rallied aggressively, broke structure, created a fair value gap. After doing so, pulled back, OTE, fair value gap, order block, time and price, 9 a.m. to 10:30 a.m. Bam, that's the low. Your target, still the daily volume imbalance. So your entry would be here. Your target, daily volume imbalance up here. And this would be the big expansion we would expect forming after the inside bar. And using the daily PD array for targets, time and price for entry, and this PO3 depiction is just simply showing that this is the prediction of the daily range, classic buy day with New York open creating the low. Okay, so this is the power of 3: accumulation, manipulation, and then distribution into the daily volume imbalance. So the goal is to buy near the low of the day and to exit at the high of the day. So you only want to be trading classic buy and sell days, and this should be your goal: to enter near the low, getting out near the high. If you trade the weekly candle, entering near the high, getting out near the low, and vice versa. That should always be your goal. If you're not entering near the low, I wouldn't be looking to enter. I'm not saying you have to catch the exact low, you don't need that, but near the low. It just makes your probabilities higher. We can see that price rallied when above the daily open price, so we wouldn't want to be buying above here. We want to see price come back down into a discount, back below the daily open, and then that's where we want to be buying, and that's where near the low of the day. We want to be getting out close to or at the high of the day, using the daily PD array in premium with low resistance, liquidity, and understanding that the news driver is the catalyst after the inside bar. And then the S&T divergence, the Kraken correlation, is the confirmation that S&P is indeed the stronger one because it failed to take out the low. Remember, the S&T divergence here on Tuesday was showing that S&P was the weaker because it failed to take out the high, so you focus on selling S&P. This divergence here shows us that S&P is the stronger because it failed to take out the low, so you focus on buying S&P instead of buying NASDAQ. Target, daily volume imbalance. Beautiful price action, and I hope you learned something. For more information, go into my Telegram free channel, click the link in the description below, and you'll see more information on weekly profiles, market maker models, classic buy and sell days. But with that being said, I'll see you on the next video. Stay safe, and as ICT says, good luck and good trading.